2020, Reddit user Mandingop created an iceberg chart. Icebergs are tiered lists. Each descending tier deals with increasingly more obscure subjects as you descend the iceberg. The deeper you descend, the weirder it gets. And in this case, that subject is the stock market. Reddit user Mandingop also created a written draft explaining his thoughts on each itemized listing on his chart. So join me as we take a journey down the iceberg. Please note, I do not necessarily endorse the items on this list. I may even add and expand upon some of the items as we make our descent. Let's begin. Tier 1. The surface. Blue chips. Glamour stocks like Microsoft, Disney, Apple, etc. Can't go wrong with buying these. Blue chips are essentially the most established and trusted companies in the market. Investments in these types of securities are considered less risky long term, but as with everything in the market, by no means a guarantee. Robinhood. Probably the most recognizable trading platform. Robinhood, founded by Vlad Tenev, an ingenuitive platform that is best avoided if you're a retail investor. Numerous controversies, lawsuits, settlements, not to mention defrauding investors by restricting their trading ability, thereby overriding a so-called free market. Avoid. NYSE, NASDAQ, TSX, and OTC. Most popular stock exchanges amongst Americans and North Americans. The New York Stock Exchange is an auction market utilizing specialists designated market makers, while the NASDAQ, National Association of Securities Dealers Automated Quotations, is a dealer market and the world's first electronic exchange. It operates in 29 markets. TSX is the Toronto Stock Exchange, Canada's biggest exchange. OTC is the over-the-counter exchange. Over-the-counter markets allow for direct trading between two parties, forgoing the use of central exchanges or other third-party vendors. OTC is far riskier than traditional exchanges, but it allows investors to invest in companies not yet listed on those traditional exchanges. Timothy Sykes. Popular penny stock trader, known for his courses and success. Okay, great, moving on. Dividends. A dividend is a distribution of profits by a corporation to its shareholders. When a corporation earns a profit or a surplus, it is able to pay a proportion of the profit as a dividend to its shareholders. Pretty self-explanatory. Day trading and investing. Two of the most popular forms of buying stocks. Day traders trade within the parameters of a market day, seeking small upswings or downturns in volatile securities, whereas investors invest funds seeking growth over short, mid to long-term timeframes. Insider trading. Trading based on information not known to the public, which is usually received by a corporate employee leaking information or the employee itself. A common malpractice especially prevalent throughout Congress, by those overseeing and privy to sensitive corporate data. See Nancy Pelosi. If Congress were as competent at doing their jobs as they are at miraculously beating the stock market, many people's lives might start improving. ETFs. ETFs give you a way to buy and sell a basket of assets without having to buy all the components individually. An ETF works like this. The fund provider owns the underlying assets, designs a fund to track their performance, and then sells the shares in that fund to investors. Again, pretty self-explanatory. Forex. Foreign exchange. Popular form of trading which involves buying and selling different currencies. The foreign exchange market allows speculators to exchange global currencies in the hope they will either appreciate or depreciate in value. It's a method of betting on the volatility of money itself. Bank brokerages. Trading and investing with banks is considered more convenient as opposed to trading apps by most people. Pattern day trading restrictions. Restriction on margin accounts with less than $25,000 in capital to prevent individuals from risks. This is a double-edged sword. Firstly, it's a barrier to entry, but secondly, it's done in part to help curb risk on retail investors using a margin account. Warren Buffett. Probably one of the most known faces in the stock market community. Everyone knows his story selling Coke bottles during rush hour and his success in investing. The man, the myth, the legend. One of the most successful and quotable investors the world has ever known. This is one of his best. Price is what you pay, value is what you get. Great Depression. The Great Depression was a severe worldwide economic depression that took place mostly during the 1930s. Beginning in the United States, the timing of the Great Depression varied across the world. In most countries, it started in 1929 and lasted until the late 1930s. You've all probably heard about the Great Depression, but it wasn't just a depression, it was a catastrophe disproportionately affecting minorities and low-income homes. Deaths and suicides in the US and around the world skyrocketed as people starved in their millions. This was the reason FDR began his New Deal social program. Tier 2. Tip of the iceberg. Twitter gurus. Twitter pages which post plays and sell you their courses or discords. Twitter is quite possibly the most effective means of quick communication the world has ever seen, but it's also a layer of deception, lies, fraud, and grift, especially in the investment world. Many so-called professional investors are quick to try and sell you courses, merchandise, or content locked behind paywalls, but the truth is, when it comes to the stock market, the only money you should be spending is on your investments. If gurus are so good at investing, they wouldn't have the need to sell you anything, would they? Be cautious. Swing trading. Slightly more advanced way of trading which can be short or medium-term positions in a stock. A swing trade is essentially any trade held overnight, as opposed to day traders who execute trades both entry and exit within market hours on any given day. Stock twits. Garbage spam app for discussion around companies listed on NYSE and NASDAQ. StockTwits is basically Twitter, but solely catering to investors. Now that may sound good, but the reality is far different. NKLA scandal. NKLA got pumped and dumped as they were supposed to be the next Tesla. LOL. There's a lot to this scandal, such as fraud, lying to investors, and the CEO being a piece of shit. Due diligence. Everyone should do this. It involves taking a deep dive into a company and looking over financials, SEC history, stock float, ownership, outstanding shares, etc. If you're an investor, you've heard the term due diligence before, but frighteningly few people conduct it, or even know how. This unfortunately leaves newcomers to investing susceptible to a market full of fraudsters. Bearish, bullish trends. Indicators commonly used by traders to predict the outcome of how a stock will move. Plenty of different trends such as double bottom, death cross, cup and handle, etc. Indicators on trading platforms primarily work because traders adhere to them. It's human nature to seek patterns, seeking order from chaos. Bullish and bearish trends are useful, but never a guarantee. Pumps and dumps. Buying a shit ton of stock in a garbage company with a small float, creating hype around it, then dumping on the pump it gets from the hype. This is very common, and rife on YouTube and Twitter, etc. Fraudsters pick a cheap security, preload their positions, then lure unsuspecting investors who they use as exit liquidity. IPOs. Initial public offerings, the price a company starts at on its first day on the exchange, usually overpriced if it's a hyped company. One very simple rule of investing: never buy into a company on the day they IPO. You are almost always guaranteed to lose money. Discord communities. created by people to either orchestrate pump and dumps, find plays, or for general discussion. Employee stock options. Corporate employees of publicly traded companies have the option to receive warrants in place of their salary. Value investing. Value investing is an investment strategy that involves picking stocks that appear to be trading for less than their intrinsic or book value. Value investors actively ferret out stocks they think the stock market is underestimating. Two of the best current examples of this are AMC and GME. Value investors are forward-thinking, conduct due diligence, and formulate mid to long-term hold investment strategies. R stocks. Second largest trading subreddit, but probably the go-to forum for retail investors/traders. R stocks is essentially Wall Street bets, minus the sadism and loss porn. Level 1 data. Level 1 data refers to the lowest ask and highest bid currently offered. Webull. Another popular beginner trader app for buying and selling stocks. Webull is a frontrunner in the commission-free gamification of investing platforms, a free service at face value, but as with everything in life, nothing is truly free. It's always worth reading the small print, deciphering the needlessly complex jargon, and judging for yourself if what you're being offered or provided is actually free. If you're being given something for free in the financial world, then you are most certainly the product and not the client. We've reached the end of Tier 2. It's time to delve below the surface. But word of warning, from here on down, you're gonna start hearing the word theory quite a lot. Okay, strap in and buckle up. Down we go. Tier 3. Into the depths. Market makers. A market maker or liquidity provider is a company or an individual that quotes both a buy and a sell price in a financial instrument or commodity held in inventory, hoping to make a profit on the bid-ask spread, or turn. The biggest market maker on the block and by far the most controversial is Ken Griffin's Citadel Securities. I could make an entire video on how market makers run rampant, ignoring regulation, bending rules and paying legalized bribes instituted by another party, which incidentally will be next on this list. One thing is for certain, wherever you are in the market, you're never far from Ken Griffin and Citadel Securities. SEC. The U.S. Securities and Exchange Commission is a large independent agency of the United States federal government that was created following the stock market crash in the 1920s to protect investors and the national banking system. To be perfectly blunt, the SEC is a scam. They exist solely to maintain the perception of regulation rather than fixing the vast array of irregularities present in the market perpetrated by the likes of Citadel Securities, amongst others. Instead, the SEC focus primarily on small-time retail fraudsters, or small family firms. The SEC has long been captured by the very institutions it is charged with regulating. It is also worth noting that the SEC is a perpetual revolving door to people from the financial industry. So it should come as no surprise that these same financial institutions run rampant, breach regulations on a daily basis, don't even legally have to admit guilt when ensnared, and pay the same minuscule fines when they are, which essentially works as legalized bribery. Short interest theory. Short interest theory states that high levels of short interest are a bullish indicator. Therefore, followers of this theory will seek to buy heavily shorted stocks and profit from their anticipated rise in price. There are genuine reasons for shorts to exist. See Enron, listed further down. But for those unaware, shorts are a method of lending and then selling while betting against the price of a security, in the hope that you can then buy it back later at a cheaper valuation. We'll discuss this later too, but short interest theory isn't so much a theory as a fact. But there's a catch. In order to flush a security of shorts, you need volume and a resilient, dedicated investor base, able to withstand and cope with aggressive and malicious institutions. Again, see AMC and GME. WeWork IPO. I'd recommend people check this out with full details and see how a dysfunctional CEO can destroy a company and its future. In short, it was a complete disaster. In 2019, former ousted CEO of WeWork, Adam Neumann, drove his company straight into the ground. And all of it was down to his egocentric behavior. WeWork's initial IPO was postponed, Neumann was removed, and then WeWork publicly floated in 2021 to little fanfare. Kangaroo trend. It is given to understanding that a kangaroo market is one where stock prices swing up and dive down rather rapidly, without any news being the apparent trigger. Dot-com bubble. The dot-com bubble was a stock market bubble caused by excessive speculation of internet-related companies in the late 1990s, a period of massive growth in the use and adoption of the internet. The dot-com bubble can literally be boiled down to speculative overvaluation, a trend you'll be seeing a lot more of in this list. Charles Schwab. One of the more popular ways to buy and sell stocks with individuals or groups with more capital and IQ. Charles Schwab took off primarily because it led the industry in low pricing and efficiency. Today it is one of the giants, but by no means the best. Your IQ will remain the same whether you invest with them or not. Are Wall Street bets? Most popular subreddit in terms of subscribers, a place for memes and discussion around stocks, mostly options however. Better described as, if 4chan found a Bloomberg terminal. Wall Street bets is an amusing subversive subculture of revelers reveling in financial loss and pain on those unfortunate enough to follow its own advice. You'll laugh, you'll cry, you'll probably walk away broke, and more confused than when you entered. Stephen Sugarman. So essentially he was trying to do a hostile takeover of BYFC. However, Reddit came to the rescue and pumped the shit out of the stock price, which is great and all, but they also made Sugarman profit heavily off the pump as he sold his stake, ending his attempt to take over BYFC. This is the tale of every cloud having a silver lining, especially if you're Stephen Sugarman. Ship HQ. Last year, a picture surfaced of Ship's HQ, which was a beat-up old building located in the middle of the ghetto. This HQ was the one listed on their SEC filings. However, it was soon updated with a new address and a much cleaner looking building. This is the picture of Ship's former headquarters. Market Bubble Theory. Bubble theory is an informal financial hypothesis that presumes the possibility of rapidly rising prices as investors begin buying beyond what may seem like rational prices. It suggests that stocks with rapid increases should see a massive correction shortly after. What has just been described is basically the irrationality of FOMO, the fear of missing out, but on a massive market-wide scale. Chinese pump and dumps. Every now and then, you'll see some random-ass Chinese company rocket out of nowhere, then dump soon after, and then stagnate like nothing happened. JFIN, WIMI, KNDI, and CJJD are some examples. However, you can find many, many more. Chinese pump and dumps are truly on an industrial scale and have volatility to match. And if anybody is wondering, it's almost assuredly state-sponsored activity. Index funds. An index fund is a mutual fund or exchange-traded fund designed to follow certain preset rules so that the fund can track a specified basket of underlying investments. Private discords. Mostly used for orchestrating pump and dumps, however, it is thought that there are exclusive discords for insider trading. Anyone attempting to conduct insider trading via a private discord would be unquestionably stupid. And because it's unquestionably stupid, it's almost guaranteed to exist somewhere. Scanners. Also known as stock screeners, which are tools that allow investors and traders to sort through thousands of individual securities to find those fit for their criteria. You can sort by different filters such as volume, market cap, sector, etc. Kelly Loeffler. Senator Kelly Loeffler dumped millions in stock holdings in the days and weeks after a private all-senators meeting on the novel coronavirus that subsequently hammered US equities. She was investigated for insider trading, but nothing ever came of it. As discussed earlier, Congress is an insider trading clique. They oversee sensitive confidential information, and help govern the rules by which companies operate. George Carlin said it best: "It's a big club and you ain't in it." Are penny stocks? Subreddit to discuss penny stocks, probably the best subreddit on this iceberg. I wouldn't necessarily agree with that assessment. I'm sure penny stocks have made many a person a fair fortune, but it's also a hive of scam artists and the very location pump and dumpers frequent most often, in order to place a finger in the air and see which way the wind's blowing. Millionaires use Reddit. Theory that big fish use subreddits to find their next play, whether it be investing, shortings, day trade, etc. Not too outlandish when you use level 2 and see huge orders on stocks discussed on Reddits. This should be obvious, if not, it's absolutely the case. But not only millionaires, they are people too, remember, but institutions have departments dedicated to trawling subreddits and social media. Ken Griffin himself admits to having been on Wall Street Bets.
Have you been on Wall Street Bets?
Of course I have.
And?
There are some great videos of them trying to attack Citadel.
Shorting. The act of selling a security at a given price without possessing it and purchasing it later at a lower price is known as shorting. Shorting is largely done with the motive of earning profits by purchasing securities at a lower price later on. The process of lending to sell, bet against to buy back cheaper at lower valuation, a method abused by institutional hedge funds to target and destroy good faith companies that they have unjustly targeted. However, being short on a stock these days comes at a price. See Gabe Plotkin's Melvin Capital, amongst others. Prison stocks. Ever wanted to invest in for-profit prisons? Two of the biggest companies, Core Civic and the GEO Group, are publicly traded in the correctional system. Personally, I find this obscene. This is capitalism taken to absurd extremes. And yes, just in case you were wondering, it's slavery. Luckin Coffee. In April last year, the coffee chain admitted that at least 310 million of its sales over the previous 3 quarters had been fabricated. They were delisted and all shareholders took a massive hit as the share price plummeted. I guess you'd really have to like coffee to stick with that company. Level 2 data. Level 2 is a generalized term for market data that includes the scope of bid and ask prices for a given security. Also called depth of book. Level 2 includes the price and order book, listing all price levels of quotes submitted to an exchange and individual quote. Stan exposed. Twitter guru, Stan Trading Man, was exposed for allegedly talking to underage girls. To add to the controversy, he is married with a child. And I have to admit, I have no idea who Stan is or if what is described is accurate or not. And I have zero interest in researching it to find out. Enron. Watch Enron, the smartest guys in the room. This scandal is way too complex to summarize. Alternatively, there is a great video by The Company Man on YouTube. Enron was a big scandal. Enron was an energy company that blackmailed entire cities, cooked their books, and used subsidiaries to inflate and hide debt. Leaps. Long-term equity anticipation security are derivatives that track the price of an underlying financial instrument. They are option contracts with a much longer time to expiry than standard options. Leaps are basically options just with longer expiration dates, usually from 1 to 3 years. Peter Lynch. Peter Lynch is an American investor, mutual fund manager, and philanthropist. He is considered one of the greats when it comes to investing. A highly successful investor, from 1977 to 1990, Peter Lynch averaged 2.92% on his investments, more than doubling the performance of the S&P. OTCs. Over-the-counter refers to the process of how securities are traded for companies not listed on the formal exchange. Securities that are traded over the counter are traded via a dealer network as opposed to on a centralized exchange. The Road to Router. This is an edition of mine. So, what is The Road to Router? Well, weirdly enough, it's a short comic book printed by the Federal Reserve Bank of Boston as a teacher's guide for elementary children. However, for a children's book, it's a little bit too deep and goes into subjects that the average child wouldn't even understand. Most people who read it don't understand it. And that's where the fascination and quiet conspiracy theories come from. It covers such topics as scarcity, distribution, manipulation, and the eventual goal of creating a utopian civilization in the mythical Colorland. Some pretty heavy allegorical reading for kids, I think you'd agree, and especially for the teachers trying to explain it to them. The Road to Router is but one of a number of publications the Federal Reserve Bank of Boston distributed. Little known or spoken about outside of hardcore financial circles, but by those who have read them, these publications have been discussed and puzzled over for years. The Road to Router certainly appears to have more to say than might initially meet the eye. You can find the Road to Router in one of its many different forms amongst other publications online on the Boston Fed website. Okay, we've reached the end of Tier 3. Next time we'll take a deeper dive beneath the waves and see what's lurking down there for us in the depths. To be perfectly honest, the first 3 tiers are a little bit standard, but the deeper we go, the weirder it is going to get. So I hope you join me next time when we continue to descend down the stock market iceberg. Please like, share, subscribe or comment if you enjoy the content. Thanks for watching and see you next time.